As the tax practitioners, we have been tasked with providing you with a tax opinion for the year of assessment 2022 regarding your share transactions now. We often get asked queries on how to deal with certain transactions without being given the whole picture, which could lead to us giving the wrong opinion. This is why it is important for us to get an understanding of the information before we provide you with an opinion.
Good day, my name is Carla Ritchie, and I'll be walking you through the share treatment of the Aspen Pharmacare Holdings. As a share dealer, you will be able to claim a deduction under Section 11A for the cost price of these shares. This deduction will amount to the $164,850 cost price. However, under Section 22(1)(a), you will be required to add back the closing balance of these shares as they are regarded as trading stock. Within subsequent years, you will be able to deduct this cost price again as an opening balance. Therefore, the net effect on your gross income for the year of assessment will be a null effect.
Based on the information you've provided us with, it is our understanding that the shares held in Sasol Limited are held for speculative purposes by virtue of the nature of your business, which is stockbroking. Shares that are held for speculative purposes are regarded as trading stock as per Section 22 in the Income Tax Act 58 of 1962. The distribution of these shares will be regarded as a deemed disposal of trading stock for no consideration. However, the disposal has to be tested against Section 9C requirements in order to determine whether or not the disposal triggers capital gains tax consequences. After careful consideration of the information provided, we are confident in saying that the distribution does not trigger capital gains tax consequences. Because this distribution is regarded as deemed disposal of trading stock, Section 22(8) says that you will be deemed to have recovered or recouped the market value of these shares on the date of transfer, which is the 28th of February 2022. Furthermore, since these shares are being distributed to shareholders, it will be regarded as a dividend in specie. A dividend in specie is when a company declares a dividend in any other form other than cash. According to Section 64D, the declaring company, which is in this case will be Nedbank, will be liable and responsible for the payment of dividend, which is 20% of the market value of the shares on the date of transfer.
Hi, my name is Monty Modise, and I'll be explaining the tax treatment of the Vodacom shares that were held in the business. So essentially, the Vodacom shares were held for speculative purposes, and the specific guidance that is given in the tax legislation on how to treat those in the calculation of taxable income. So in the beginning of the year, trading stock, because those were held as trading stock has to be deducted as per Section 222(a), right? So there was a value of 750,000 Rand worth of shares that has to be deducted in the beginning of the year. And through the year, there was a purchase of shares that was done of 1,000 shares worth 144,800. Because these shares satisfied the requirements of Section 11A, they have to be deducted. And at the end of the year, the full closing stock of the shares that we still have left in the business, because these shares, remember, were held as trading stock, has to be added back as per Section 22(1)(a). So the full value was 894,800 that has to be added back in the calculation of taxable income.
Hi, my name is Tando Mfene, and I will be taking you through the transactions relating to UPN Limited. The first transaction regarding the foreign dividend income received on the 31st of December 2021. The dividend will be specifically included in the taxable income of the group due to the provision of Section 1K of the gross income definition. As it was received through foreign exchange, it will have to be translated from the US dollar to the South African rand using the spot rate on the day it was received according to Section 25 Cap D1. Section 10 Cap B2 requires the group to hold at least 10% of equity and holding rights in UPN Limited to apply for full exemption. As this does not apply only a portion of the dividend will be exempt according to Section 10 Cap B3. The group will deduct the trading stock held at the beginning of the year as per Section 22(2). Due to Section 9 Cap C5, there will be capital gain consequences on the disposal of these shares on the 3rd of January 2022, as these shares have been held for more than 3 years, essentially changing the nature and intention of holding these shares from trading stock to being capital in nature. There will be a deemed recoupment at market value as per Section 22(8), and the capital loss calculated according to the 8th schedule will be added to the aggregate capital gain or loss of the group. Thank you.
So, to conclude, both Vodacom and Aspen shares are eligible for deduction on the purchase, but the closing balance must be added back to the gross income. Now, with regards to Vodacom, they had existing shares on hand at the beginning of the year, so they're allowed to add back that balance into their gross income. Now, the foreign dividend received from UPN will first need to be translated into rands and then be added to gross income. However, a portion of it will be exempt and thus deducted from gross income. The disposal of UPN shares resulted in a capital loss as it was deemed capital in nature. This capital loss will be added to the aggregate capital gains and losses for the year. Now, the distribution of Sasol shares will result in dividends in species, and thus dividends tax is payable, and recoupment value of Sasol shares will be included in gross income.
We hope the tax treatments we have provided you today have helped you gain a deeper understanding of the share treatment for this current year of assessment and for subsequent year of assessments, and we look forward to helping you in the future. Thank you.